Anthony Grasso here, bringing you financial news you can use. In this video, I'm going to do a stock analysis on Globalstar. Is this an out-of-the-world penny stock going to the moon? Or will the revenue projections bring this one back down to earth? Let's find out together. I'm going to go over a summary of the company, its product offerings, recent headline news, financials, analyst projections, and give it my buy, hold, or sell recommendation for both your short-term crazy investors out there and those long-term growth investors. And as always, folks, don't forget to smash that like button down below and consider subscribing. Hit that notification bell if you'd like to hear daily stock reviews and recommendations from a non-biased source. So let's get right into it. So Globalstar provides mobile satellite services, MSS, including voice and data communication services globally throughout satellites. Now, the company provides wireless communication services in areas not served or underserved by terrestrial wireless and wired line networks, and in some circumstances where terrestrial networks are not operational due to natural or man-made disasters. It offers voice and data communication services over its network of in-orbit satellites and its active ground stations, gateways, which it refers collectively as the Globalstar system. The company's services are available only with equipment designed to work on its network two-way voice communication and data transmission duplex using mobile or fixed devices, and one-way data transmission simplex using a mobile or fixed device that transmits its location and other information to a central monitoring station, including spot and simplex products. Now let's go ahead and look at some of the news of the company that's affecting the stock price today. So the Globalstar's band N53 in Qualcomm's X65 modem. Now the X65 is Qualcomm's flagship modem, helps to broaden the types of devices that can plug into the Globalstar's network, smartphones, tablets, laptops, and a host of Internet of Things devices that will now be able to use Globalstar's 5G spectrum. This is a significant milestone that I will discuss later on, and this is the only real news out of the company in the past 24 to 48 hours, that right before the stock just jumped up and hyped up. So let's look at some of the fundamentals of the company. Now, the company's stock price has jumped from about $1 a share not too long ago, just a few days ago, all the way up to $2.40 a share. The company currently has a market capitalization of $4.24 billion, and the company should have revenues for 2020 in the amount of near $129 million, with negative earnings of $125 million. Now, earnings have declined by about 23.5% per year over the past 5 years. That's significant. And shareholders have been diluted in the past year as well. Now, the company is trading way above my estimate of fair value, and that's taken in pure speculation on what the potential revenues might look like in the future. Are they in a good financial position? Well, they do have sufficient cash runway for at least 1 year of operation, so they're not going to go under anytime soon. So let me bring it back here. So what do the analysts say about this one? Well, the analyst consensus, it's a moderate sell. The analyst price target is 55 cents a share over the next 12 months. Now, they haven't updated their targets based upon this new Qualcomm little partnership going on with Globalstar. So we'll see exactly in the future how the analysts update those projections. Now, looking at the valuation analysis just prior to that, because the earnings of Globalstar are not available, the price to sales and price to book ratios are the most appropriate evaluation measures. Therefore, Globalstar seems highly valued with the price to sales ratio of 26.44 times, one of the highest in the diversified telecommunication services industry. However, their price to book is only 7.78 times, above the industry median of 2.5x times. Now, I'm not sure if they're updating this based upon the current jump up in the valuation, so I'll have to look into that. Now, based on the profitability analysis, losing money on a net basis, Globalstar appears to be an inefficient company. While its profitability is above the median on a gross margin basis, its bottom line, the net margin, is among the weakest in the diversified telecommunication services industry. Now, looking at the growth rates analysis, trailing 12 months earnings at Globalstar declined at a greater rate than revenues. Additionally, their average company in the diversified telecommunication service industry also saw falling earnings, but it's at a slower rate. Now, looking at the financial strength analysis, Globalstar has a debt to total cap ratio of 45%, which is in line with the diversified telecommunication services industry norm. Now, the company could face trouble, though, servicing its debt, as both its interest coverage and quick ratios show that neither operating profits nor current assets alone are great enough to satisfy interest obligations. So if they run into trouble, they might have to raise some more capital and possibly do more share dilution to cover their obligations so they don't go under. Now, looking at a few of the analyst reports, now the New Constructs report says they recommend investors avoid Globalstar and say that the stock has more downside risk than upside potential. Now, the street ratings for this company is a sell as well. That is driven by a multitude of weaknesses, which they believe should have a greater impact than any strengths and could make it more difficult for investors to achieve positive results compared to the most of the stocks they cover. Now, the company's weaknesses can be seen in multiple areas, such as deteriorating net income and disappointing return on equity, and I agree with that one. So my buy, hold, or sell recommendation on Globalstar right now, here are my thoughts. I believe the recent surge in the stock price today was because of the deal of Qualcomm's support of the band N53, which is a huge milestone in the efforts for Globalstar to commercialize their new spectrum. Now, Qualcomm will use its band N53 technology in the new 5G modem called the X65. Now, with Qualcomm support, Globalstar will be able to expand the device ecosystem significantly. This will allow the company to include the majority of popular smartphones, laptops, automated equipment, and the other Internet of Things modules in its networks. We can also remember that on January 20th, Globalstar Stock was on a run of late after the company announced the monthly subscription box service for satellite connectivity through its wholly owned subsidiary Spot. A deal with Nokia to provide Globalstar's band 53 spectrum at the Port of Seattle, Terminal 5 on January 7th also boosted share prices as well. This is undoubtedly overwhelmingly positive news and will most likely lead to a significant increase in revenue. But I want to stress any revenue projections have not been posted yet, so we don't really have any idea of how much increase in revenues this will bring for the company. Now, I want to examine a statement from Jay Monroe, Globalstar's executive chairman. He said, as we continue to build momentum in our terrestrial spectrum commercialization, this partnership substantially expands Globalstar's potential. Now, in December 2016, if you can remember, the FCC adopted rules permitting Globalstar to deploy a terrestrial low-power broadband network using 11.5 megahertz of the company's 2.4 gigahertz spectrum. Now, let's examine what the company said in its 2019 financial statement. It says, turning to our terrestrial spectrum asset, we have made significant progress over the last several months by adding to our roster of ecosystem partners and advancing our international regulatory efforts. Most importantly, we also announced that the third generation partnership project, the 3GPP, approved the 5G variant of Globalstar's band 53, which is known as the N53. Achieving 5G status with our band is a significant advancement in our spectrum efforts. New networks around the world will be built utilizing 5G's advanced technology, and our band will now work in those networks. We are actively working on potential private LTE deployments with partners including Nokia, Airspan, and Airwaves that can serve as the providing grounds for our commercial efforts and have the potential to produce meaningful revenue. We are driving the ecosystem to have more infrastructure and industrial devices working on a band 5.3 for the first deployments with our partners. This effort will allow them to meet their customer needs and across industries, including utilities, transportation systems, in building wholesale networks, in building and on-campus private LTE networks, and mobile wireless services, among others. And now I want to bring up what they said in their quarterly 3 of 2020 report, where they said the 3GPP approved the 5G variant of our band 5.3, which is known as N53. The band class provides pathway for a terrestrial spectrum to be integrated into handset and infrastructure ecosystems. Additional follow-on 3GPP specifications and approvals are expected in the future. So basically, expanding it to reach the new 5G standards is extremely important, but we need to take a step back and put two and two together. Let me bring it back here. The most important question of all is how much revenue will come out of the Qualcomm chip deal using the band N53 technology in the new 5G modem. Right now, I cannot locate any information regarding what those revenues projections look like at this moment in time. That is a huge key bit of information we are missing out of the analysis and the equation. The bull case for Globalstar is that the global mobile satellite services MSS market was valued at around 3.5 billion in 2019, which is expected to reach about 5.5 billion by 2027. But let's step it back. Let's step a bit back. Globalstar only has a little over $100 million in revenues for 2020. So for long-term growth investors, we do not have enough information at this exact moment in time to equate that the Qualcomm deal to real-world revenue dollars. We know it'll be something, but based on the current market capitalization of $4.24 billion, the stock is already priced in the increased future revenue and then some. So if you're a long-term growth investor, this is a highly speculative play with only little upside potential, but a lot of downside risk depending on what revenues and earnings can be made from this Qualcomm partnership. I would sit on the sidelines for more information and make a better financial decision. So keep this on your watch list. If the company can increase the revenues significantly by, let's say, $100 million from this one deal alone, that would be a spectacular thing. But we need to be brought back down to earth right now and wait to see what exactly the Qualcomm chip means for Globalstar in the long run. With that being said, I've been monitoring social media and Reddit, and there have been lots of hype right now trying to rally the troops for what may become a massive run-up in the stock price for the short term. Since there is no information about the potential revenue increases projections for the Qualcomm deal, for the short-term speculative investors out there that do not care about fundamentals of the company and are just trying to buy in on the hype of the company right now, they might be able to push this stock up above about $5 a share in the short term. Maybe they might get resistance above $3 if the army of retail investors pounce on this stock. But any future news and information regarding future revenue targets that do not shoot the revenues up 10 times or to the moon, earnings positive instead of constant state of losing money, and a path to profitability sooner than later, this one will eventually take all the way back down to the reality land. Analysts had previously questioned whether Globalstar would be able to find ways to monetize its spectrum assets. So let me repeat that, and this has been a theme with Globalstar. Analysts had previously questioned whether Globalstar could be able to or would be able to find ways to monetize the spectrum assets, especially with this Qualcomm deal. Can they actually do it this time? It is unknown. On January 22nd, Morgan Stanley analyst Simon Flannery went up so far to downgrade Globalstar stock from equal weight to underweight and place a 55-cent target price on its shares, due in part to his concerns regarding the satellite company's monetization efforts. However, today's gains suggest that investors are buying into Globalstar's 5G strategy after the announcement of its potential game-changing partnership with Qualcomm. But we don't know if this is a game-changing partnership with Qualcomm. We are not there yet. So invest at your own apparel right now. So short-term investors, you might reap some big rewards, but always remember, be very careful. So there you have it, folks. And as always, don't forget to smash that like button down below and consider subscribing and hit that notification bell if you'd like to hear daily stock reviews and recommendations from an unbiased source. Until the next stock update video later today or tomorrow morning, folks, ciao.